Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the Always Present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
Welcome to the deep dive. We're jumping straight into a pretty major economic development, the second-term implementation of global tariffs by the Trump administration.
Yeah, and it's not entirely out of the blue, is it? It sort of reflects that consistent theme we've heard about fair trade versus, the standard free trade agreements.
Exactly. It's positioned as an alternative.
And these tariffs, they're doing a few things at once. They're definitely a signal about wanting to restructure the economy, kind of echoes protectionist ideas like Alexander Hamilton way back when.
Right, that historical parallel.
And let's be honest, they're also a pretty blunt instrument for international negotiation.
Mm-hmm. And our sources, particularly Nassau Street partners who are leaning on heavily today, they really point to how the pandemic highlighted some vulnerabilities.
Oh, absolutely. The whole just-in-time supply chain fragility, it became really obvious, especially for critical things, medicines, semiconductors, defense gear.
Yeah, you saw that play out.
So the administration's perspective, as Nassau Street Partners helps us understand it, seems to be that the U.S. economy got maybe a bit too focused on finance.
Overly financialized is the term they use.
Right. And these tariffs are viewed as a tool, a lever to try and reverse some of that deindustrialization, bring manufacturing back, especially to the industrial heartland.
Okay, so that's the context. Our mission in this deep dive, then, is to really unpack the practical impact of these tariffs. We want to focus specifically on the lower middle market, using those insights from Nassau Street Partners.
Sounds good.
All right, so the tariffs get announced. What was the immediate market fallout? How did things play out?
Well, it wasn't quite the reciprocal tit-for-tat initially suggested. It ended up being more unilateral.
Which kind of aligns with Peter Navarro's viewpoint, doesn't it? That idea that trade deficits automatically mean you're being taken advantage of?
Precisely. That framing was definitely influential.
And Nassau Street Partners offers sort of two ways to look at this, right? Is it a very calculated, long-game negotiation tactic? Or maybe a different understanding of how global trade actually works. I mean, they bring up the U.S. trade surplus with Switzerland that's not usually seen as exploitation.
That's a good counterpoint they raise.
Yeah.
And the market reaction itself, it was pretty immediate and quite telling.
What did that look like specifically?
So starting Friday, April 4th, running through about Wednesday the 9th, you saw equity markets take a significant hit across the board. Major indices were down.
A clear risk-off move.
Definitely. And it wasn't just equities. Nassau Street Partners flagged the spike in the VIX, the CBOE volatility index.
The fear gauge.
Exactly. It hit its highest level since, early 2023? That tells you the level of anxiety jumped pretty dramatically.
So what caused that shock? Was it just tariffs in general?
Well, the analysis suggests it wasn't just the tariffs themselves. People might have expected some trade action. It seems it was more the scale, the sheer breadth of it, hitting allies and adversaries alike.
And the speed.
And the speed, yes. Plus, a lack of clear signaling beforehand. That combination scale, speed, surprise created huge uncertainty around supply chains, input costs, corporate earnings, everything.
Okay. Now, President Trump famously keeps a close eye on the stock market as a sort of economic report card. How did the administration react to that initial turbulence?
Well, according to the insights from Nassau Street Partners, that market dip likely factored heavily into the decision for that 90-day pause on full implementation.
The pause.
Okay. There are also whispers, apparently, of some internal discussions, maybe disagreements on the best way forward. Suggest maybe recognition that the initial rollout was perhaps a bit too much, too fast.
And did the pause work? Did markets respond?
They did. quite significantly, actually. Once the pause was announced, equity markets saw a pretty noticeable rebound, recovered a good chunk of those earlier losses.
So very sensitive to signs of a more measured approach.
Extremely sensitive. It underscores how much the market values predictability, or at least less abrupt policy shifts.
And Nassau Street Partners also mentions a potential shift within the administration. Secretary Bessent taking a more prominent role, maybe Navarro's influence lessening.
That's the read they're getting. And capital markets seem to view that potential shift constructively.
How so?
It's seen as potentially signaling a move towards, well, a more coordinated, maybe more market-aware policy execution, as Nassau Street Partners puts it, basically considering the market impact more carefully.
Okay, so with this initial volatility, the pause, the potential shifts, how are different investors thinking now, particularly in equity capital markets?
It's interesting. Nassau Street Partners observes a possible split. You might see large institutional players pull back a bit, de-risk in the short term.
Okay, the big money gets cautious.
But that caution could actually create openings for others. Think high net worth individuals, family offices, even strategic acquirers. They often have more flexibility, a longer time horizon.
So they might see opportunity in the disruption.
Exactly. A chance to look past the immediate noise and find potentially undervalued assets for the long run.
And what about private equity? Still seeing interest there.
Oh, definitely. Nassau Street Partners points to a McKinsey report showing continued strong appetite. Something like 30% of LPs expecting to increase their PE allocations.
Wow, okay.
So that interest, combined with the public market jitters, seems to be driving a sort of recalibration. Capital is looking towards private opportunities with solid fundamentals.
Like what kind of fundamentals?
Things like defensible margins, recurring revenue, scalable operations, the kind of stuff you often find, crucially, in lower middle market companies.
So this brings us right back to the lower middle market focus from Nassau Street Partners.
Precisely. Their analysis really highlights the LMM as potentially becoming a sweet spot right now.
Why specifically now?
Well, beyond those strong fundamentals, they also anticipate more activity from strategic buyers. Companies looking to consolidate, maybe pick up talent or market share at a better price.
Makes sense.
And for the actual founders and operators in the LMM, Nassau Street Partners describes this as potentially a rare window.
A rare window. Explain that.
It means maybe a more receptive investor base, looking specifically at their segment, valuations that have perhaps adjusted a bit, and a capital environment that could really favor companies with a clear growth plan and solid operations.
Got it. Okay, let's shift gears slightly. What about the debt side, debt capital markets? How do they react initially?
So initially you saw that typical flight to safety. Treasury yields dipped, but only briefly.
Okay, classic reaction.
But then it reversed. Mortgage rates, corporate bond yields, they started trending up. Nassau Street Partners identifies sort of two main drivers behind that upward pressure.
All right, let's unpack those.
First, global deleveraging. Equity drops triggered margin calls, forcing investors to sell assets, reduce debt. That tightens liquidity everywhere.
Okay, makes sense. And the second?
The second is what you could infer from currency movements. The fact that the Canadian dollar, the yen, the euro rallied against the U.S. dollar. That suggests foreign investors are actually selling U.S. treasuries.
Which, as Nassau Street Partners points out, is a bit unusual, isn't it? The dollar is normally the safe haven in times like these.
That's a really key observation they make. It's a deviation from the historical norm, this sort of risk-off move away from the dollar.
But does that create any opportunities?
Potentially, yes. For foreign investors, a weaker dollar makes U.S. assets, including equities, relatively cheaper.
Discount.
Effectively, yes. So Nassau Street Partners expects this could actually increase interest from European, Gulf, Asian capital investors looking for resilient, yield-generating businesses in the U.S.
And I'm guessing the lower middle market comes back into play here.
You guessed it. Nassau Street Partners really emphasizes the track record of LMM companies during volatility. They tend to have less valuation swing, lower default rates, actually superior risk-adjusted returns compared to bigger upper middle market firms.
That resilience is key.
It really is. Plus, you've got the growth of alternative capital, private credit, mezzanine debt, offering more customized funding options specifically for these LMM operators.
So the outlook for raising debt in the LMM, pretty positive then.
For companies with clear earnings, manageable debt levels, and a strong market position, yes. The analysis from Nassau Street Partners is actually quite optimistic on that front.
Okay, so bringing it all together, looking forward, what are the main takeaways from Nassau Street Partners' perspective?
The core argument is that the lower middle market is really poised to become a major focus point. for both domestic and international capital.
Why that convergence?
Well, the public market volatility is pushing some institutional money to de-risk and look for stability, which the LMM offers. And simultaneously, that weaker dollar we talked about makes U.S. assets, especially resilient LMM assets, more attractive to foreign buyers seeking yield and growth.
So pull from one side, push from the other, meeting in the LMM.
Kinda, yeah. And add to that the signals from the administration, the 90-day pause, Secretary Bessent's apparent rise.
Seen as positive signs.
Nassau Street Partners interprets them as signaling a likely shift towards more, let's say, coordinated and market-sensitive policy going forward. The idea is future tariff rollouts might be better structured, less jarring.
Okay, a smoother path, hopefully. What else?
They also see a potential gradual reopening of VC funding channels to LMM companies, provided they have strong unit economics and are in sectors with good tailwinds.
And politically, any factors there?
Yeah, they mentioned the November 2026 midterms. The thinking is that leading up to an election, the administration will likely want economic predictability.
An incentive for stability.
Exactly. It could act as a sort of political anchor, maybe leading to more stable financial markets in the run-up.
So the big picture from Nassau Street Partners is really high net worth individuals, family offices, strategic buyers, they're likely zeroing in on the lower middle market.
Yeah, seeing it as the place for long-term growth, especially given the current market adjustments, potentially creating attractive entry points.
Leveraging that LMM resilience and growth potential.
That's the core message.
Okay, so to wrap up this deep dive, the Trump administration's latest tariffs certainly stirred the pot, creating market volatility. But the analysis from Nassau Street Partners really shines a spotlight on the lower middle market. It seems uniquely positioned, offering potential stability and attractive growth in this shifting landscape.
Absolutely. That inherent resilience, that growth potential makes the LMM particularly interesting during these uncertain times.
Which leaves us with a final thought for you, the listener. If investment focus is pivoting more towards the lower middle market long term, what specific sectors or maybe overlooked types of businesses within that LMM segment might hold the most compelling, perhaps underestimated growth potential in the coming years? Something to think about. Thanks for taking this deep dive with us.
Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.